Ladies and gentlemen, Greg Michalowski from ForexLive.com. In this video, I'm going to take a look at the broader U.S. stock indices from a technical perspective, more specifically the S&P index and the Nasdaq index. What are the technicals saying? What needs to happen to keep the short-term bias in play? That's what I'm going to go through in this video, so let's get started. I'm looking at the S&P index, and I'm going to start off by taking a look at the hourly chart. The hourly chart has been trending to the upside for 2024. This is a low for 2024. This is a high from 2024. Just upward sloping movements in that in the broader indice over the last few weeks, or actually month of trading. This goes back to the month of March. The price has been more up and down here with a pretty decent ceiling up at the tops, with high prices stalling here and here and here and here and here. More recently here in the month of April, the price rotated back to the downside. Now these two moving averages, this is a 100-hour moving average, this is a 200-hour moving average. They've been in play as well, and as you can see in the month of April, the price did move below that the 100 and 200 right here, but quickly rebounded and did a fairly decent job of holding resistance near the 100-hour moving average. That puts a blue line right here, keeping a lid on the pair, kind of shifting the bias a little bit more to the downside. In trading yesterday, however, the price did move below the 200-hour moving average for the second time this month, and for the second time it failed, and price moved back up in between those moving averages ahead of the CPI. CPI came out today hotter than expected, and that set stocks lower and the price back below the 200-hour moving average. So that's where we sit right now, is below the 200-hour moving average. The current price is trading 5171. The 200-hour moving average is at 5176.06. From a technical perspective, if the sellers want to really maintain a strong negative bias, we need to stay below that 76 level and start to work on the downside. Now, on the downside, what do we have? Well, we have the low price from earlier in April that comes in at 5146.06, and our low price and trading here today tested that level, found support buyers, and started to rotate back to the upside. So the prior support for April held support now, but the 100 or 200-hour moving average above is now the key barometer for today and going forward. If we can get below the 5146 level, that should open the door for further selling pressure. We take a look at this low going back to mid-March, near the 5109 is the next target. The 38.2% retracement of the full year move to the upside in trading this year comes down at 5042.24, and that too would be a level of interest for traders. It also corresponds roughly with this swing area going back in time to where we can outline different high right here, different high right here, different low right here, lows here, here before moving to the upside, and then came down, retested that area, also tested the 100-hour moving average here before moving to the upside. So this area right around the 38.2% retracement is a key target. And if you're looking for some selling, if we get some momentum to the downside below the 200-hour moving average, that would start to move below the lows that we saw in the month of April, we could be having traders look toward the 38.2% retracement as a key target for a corrective type move. Now let's take a look at the Nasdaq index, and like the S&P index, the price has been trending in 2024. The price is now below its 200-hour moving average and below its 100-hour moving average. We did trade mostly above and below it over the last couple days of trading. We did move below it in trading last week, but rotated back in between these two moving averages and trading yesterday. We moved below the 200-hour moving average, looking like we might head back lower, but then lo and behold, the buyers came in near the close and pushed the price higher. Today we've gapped lower. The 200-hour moving average currently comes in at 16225. We're currently trading at 16197, so we're still about 28 points away from that level. If we could stay below the 200-hour moving average, the sellers would be more in control. And we start to look toward the low from April. That level comes in at 16046.56, break below that level, and we start to look toward this swing area through here, where we had a number of different swing lows and swing highs going back in time between the 15862 and 15925. Finally, the 38.2% retracement of the move to the upside comes in at 1 5751.79. That would be a nice target level on the downside as well. So those would be the target levels now for the Nasdaq index on further selling pressure. So both the S&P and the Nasdaq index are showing some signs of weakness below their 200-hour moving averages. If the price can stay below those levels in trading here today, that would give the sellers some confidence to push lower, but there's work to do on the downside, including the April lows. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.